Here we have the financial statement titled The Consolidated Statements of Cash Flows. And this is for Freeport-McMoRan. So let's go ahead and start at the top of the report. The upper right-hand section here reflects the report is for annual information for the years ended December 31st, 2015, 14, and 13. In addition, the amounts are presented in millions. So working down the statement, we see the first main section involves operating activities, and both the heading and the last section, last part of this section, actually include the words operating activities. So the first line in the operating activities section is net loss or income. The net loss or income has been studied in this accounting course before, so we are familiar with a statement that includes net income or net loss, namely the financial statement called the income statement. So we can expect these amounts, the negative $12,089,000,000 for 2015, net loss of $745 million for 2014, and the net income of $3,441,000,000 to be on the income statement. So if we scroll up to the income statement, which they actually call the statement of operations, we will see these amounts that begin the statement of cash flow. So here we have net loss or income. There's the $12,089,000,000 for 2015, the 745 million loss for 2014, and the $3,441,000,000 net income for December 31st, 2013. All right, so let's go ahead and go back to the statement of cash flows, the first section. And we will see that the statement of cash flows shows this negative number, the net loss, for both 2015 and 2014 as reflected on the income statement. Now, on the income statement's on the accrual basis and not the cash basis. So what we expect the statement of cash flows to do is it's going to start with this net income that is on the accrual basis and need to adjust it to get it down to the cash basis. So under the net loss or income come adjustments. So these must be the adjustments that take the net loss or income and adjust it to the cash basis down here. So there are many adjustments that are listed in this section. The first four adjustments, one, that goes from depreciation, depletion, and amortization. The first four adjustments here, oops, too much. Those involve expenses or adjustments such as depreciation, right here, or the inventory adjustments. And these are adjustments that they don't include cash, so it would be necessary to remove these amounts. So we'll see that all of these amounts are positive numbers over here in the amounts column. So these amounts will be increasing the, or actually for the 2015 and 2014, they will be reducing the amount of the net loss. So we see that they are positive numbers, these first four adjustments. So the next adjustments after those first four that start with net gain on sales of assets and go through the other net, they a lot of these lines contain gains or payments. So you'll notice that the gains will be subtracted when it's gains. So for example, the 39 million under 2015, these gains will be subtracted, and so therefore they would be, you could look at them as decreases in cash, or the payments and any losses, those would actually be added back. So that was kind of the second subsections under the adjustments. So we will discuss further how the gains will increase net income, so it's necessary to subtract those amounts to remove them. And conversely, charges and payments are added or are increases in cash. So the next category of adjustments begin with changes in working capital. They are indented here, and the title says changes in working capital. And working capital consists of current assets and current liabilities. So the accounts listed below here are actually current asset and current liability accounts. The last line in this section is the net cash provided by operating activities. So you will see that in 2015 and 2014, we actually began with a negative amount, the net loss, and the adjustments, when you add up the total adjustments, they were positive amounts, so it actually took a negative and turned it actually into a positive, a cash provided by operating activities. So all 3 years here, 2015, 2014, and 2013, are actual cash provided. Those are cash increases. So big picture for the first operating activities section of the statement of cash flows can be summarized as, well, we saw that the statement of cash flows is for 3 years. And the operating activities section actually begins with a net income or net loss that's also included on the income statement. And the net loss or the income is adjusted for many activities to go from the accrual basis from the income statement down to the cash basis on the statement of cash flows, financial statement. So the first adjustments up here that we kind of looked at, those presented are increases, and they involve expenses that don't include cash, so they're going to be added back to the net income or net loss. The next section of adjustments involved mainly gains that are negative amounts or decreases, as well as charges or payments that that are positive amounts or increases. And then the last section of the adjustments involve changes in working capital accounts that are current assets or current liability accounts. And then the last line of the operating activities section of the statement of cash flows reflects totals as can be seen by the lines above and below the amounts. So the positive amounts of $3,220,000,000, $5,631,000,000, and $6,139,000,000 are net cash provided by operating activities.